Morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Wednesday, August 13th. Higher trade across the ag space here overnight with soybeans once again leading the charge, currently up 11 to 12 cents, near session highs. Meal prices, they've rebounded another buck and a half, while bean oil is up about 60 points. Corn tagging along, up 2 cents, 2.5 cents in two-sided trade, while wheat prices very little changed, however, teetering about a penny better. Yesterday's higher acres, yields, and therefore production figures from the USDA were record-setting in corn. Production up just over 1 billion bushels. The next closest was in 2016 when production rose 613 million bushels in the August report. That year, yields rose 7.1 bushels an acre versus 7.8 this year. Historically, however, it's kind of a mixed bag looking forward. Since 1990, yields have been raised, production and yields have been raised 18 times in the August report. 9 times production was again raised in September, while 9 times it was actually cut. In soybeans, it's one of those strange years where yields rose, however, production was down due to a significant cut in acres. Since 1990, soybean yields were raised in the August report 14 times. 9 times yields were once again revised upward in September. They were cut 3 times while left unchanged twice. So historically, would suggest higher soybean yields moving forward. Time will tell. As it stands right now, there is not a lot of wiggle room for lower soybean yields here in the U.S. Given the reduced acreage base for this year's crop, obviously a lot of that will hinge on how the demand side of the equation works out. As expected, President Trump earlier this week extended the current trade truce with China for another 90 days, likely delaying their transition into buying U.S. soybeans. FOB prices for U.S. soybeans are running roughly $40 a ton below Brazil for fall shipment. But when you add in the 23% tariff into China, those beans now become roughly $50 per ton over Brazilian beans. So spot board crush margins, they have backed up in a few more cents here this morning after collapsing 19 cents in yesterday's trade. Corn right now, I think best described as a huge production, yet huge demand. Over time, that demand will have to prove itself. But right now, global stocks among major exporters remain historically tight. Still surprised we did not see an upward revision to Brazil's corn production forecast yesterday. USDA keeping it at 132 million metric tons. Next support for spot futures is a 360.5 level. That was the low from last August. I'm not in a camp that thinks we have to go down and take that level out. We're going to see good demand for U.S. corn without prices having to get that cheap. Funds right now already have a short position right around 200,000 contracts with yesterday's trade. I do think Dees has downside risk to around that 380 level. Nove beans did shoot up to a 6-week high here overnight, filling a gap left from around the 4th of July. Export sales tomorrow, Nova Crush on Friday. I'll look for funds to continue to chip away a little bit at their large short position. U.S. weather remains decent, but not perfect, as there's some growing areas of dryness in the Ohio Valley and Northern Delta region. Wheat likely to be a follower to price swings in corn and soybeans, while yesterday's U.S. production figures largely in line with expectations. There is a historical tendency for lower production in the September report. Attention now shifts to President Trump's summit with Russian leader Putin on Friday. New contract low for September Chicago futures overnight, however, once again holding above that $5 level. To me, wheat seems cheap with very little to no weather or war premium left. Thank you for listening, everyone. Have a great day.